All right, it is very early in the morning. As you can see, I just opened up the live room, but no one is here yet. The official time is 6 a.m. I'm on the East Coast, but I figured that before everyone comes, I can kind of have a quick conversation here, explain what is it that I'm doing. So all of these trades are based on the trade alerts that are posted last night at around 6:30 p.m., about half hour after Globex opens. And so on every chart, and that's what I recommend for our members to do, on every chart that I plan to trade, I put the buy level, that's the blue, a sell level, that's the red, and then the dashed line is about a halfway point. And the point of the halfway point is that once price starts trading above it, I become bullish toward the buy level, meaning I expect price to get to the buy level. Now, in reality, some of my trades are a bit more aggressive. The more conservative approach is to be much closer to the buy level to actually take a long. That's when you go for the $100 that I recommend for our traders. Eventually, as you get better, you turn, or at least I prefer, for example, swing trading. So in my own trading, not what I teach group members, because at first you must go for you cannot, with the trailing drawdown that they have with like Apex and Lulu, you cannot be up a whole bunch of money and then price retraces against you and you get out with, let's say, some profit, but the point is you are off the unrealized account high, and that hurts your drawdown amount. So at first, you definitely go for the $100. You grow your account to the point where you no longer have to worry about a trailing drawdown, and then some. You really want to have enough of a cushion to withstand losing trades, because when you trade in kind of a way you see me trade now, the stops are larger because the targets are larger. So to be able to withstand those drawdowns, you need a larger account. So I got to take one quick break, and then I'm going to say a few more things. All right, I'm back. So, probably the most powerful things about these levels that are published is not so much the quick trade that you can take to hit your daily profit target, is the whole understanding of the market. Now, what I want to do here is I want to place a sell stop. I want to start a trailing price. One of the things that happen is that once price goes above, let's say, the buy trigger, very often it will retrace. So what I like to do is I like to start trailing the price. So in this case, it will be a sell stop. This way, if price now turns around, I already secured some profits, and I don't care if I give some back to the market. That's just to catch the bigger moves. You gotta take a chance. That not only take a chance, but it's pretty much a guarantee that you will be leaving money on the table, because price will come back against you, and instead of having whatever $800 profit, you might have 500 or 600. But for the most part, I am stopped either if price goes against me. In this case, it's a stop loss, or I am trailing a price. So I am taken out by the market. And what this allows me to do is every now and then catch some pretty big moves, because I'm just kind of trailing the market. The one thing I'm not doing is I'm not trying to short a strong market. I only try to buy a strong market, and vice versa. If a market is weak, I'm looking to short. I'm looking to buy strength and sell weakness. If more traders just adopted that way of thinking, not as many traders would be blowing accounts. Of course, there is much more to trading than that. But these levels provide our traders with an understanding that they can look at a chart and they can say, right now I'm looking to go long if price is close to the buy trigger, or right now I'm looking to go short if price is close to the sell trigger. This by itself will improve your trading tremendously. And I can make a deal with you if you wish. It's kind of early in the morning and I'm in a good mood, having a good morning so far. So here's my offer to you. Let's say you have some indicator you like, or a strategy, or some kind of a setup. Let's say there is something you use that works well for the most part, but you just wished it worked a little bit better, just a little bit better. Here's what you do. Send me an email. Write a sentence or two or the kind of trader that you are. I will send you complimentary trade alerts for the following day. It will be sometime in the evening between 6 and 9 Eastern. I will send you one set of trade alerts. Do what I did over here. Put these levels on your chart, whatever it is that you are trading. Have a buy level, have a sell level, have the midway point. And then, using whatever it is that you are using, an indicator, a strategy, a setup, whatever you use, go only longs if you are above the halfway point, and go only short if you are below the halfway point. And all I'm asking is, if you like the results, leave me a like and a comment in this video. That's it. I'm not going to be jamming your inbox with all kinds of stuff. I don't do that. I simply want to show you the difference when you are trading and you understand what the market is doing. Whatever you're using, and I have no idea, obviously, what you are using. I'm going to assume it's something decent, otherwise you wouldn't be using it. As long as there is something decent, like I said, use these levels to help you trade. And all I'm asking is, tell me the result. I think you'll be very surprised what you see. This idea that markets are either in a strong or in a weaker position, that is just reality. In every single day, that's what happens. And every single day, these levels that are posted attract price. If it's a sell level and price is below the halfway point, price is going to continue lower about 80% of the time. It's going to continue lower toward the sell trigger. If price is above the halfway point toward the buy trigger, it's going to start accelerating and going higher as it is approaching the buy trigger. In time, you will be able to hold trades. Next week? No. Next month? No. But you stick with this long enough, eventually it will become a reality. And in one of my videos, one viewer posted that I'm kind of doing the trading for you by providing the levels. Nothing could be further from the truth. I can give these levels to 100 traders, and maybe 20 of them will be profitable. There is a lot of trading to be done. These levels by themselves, if someone does not have a basic understanding of trading and what trading is, these levels by themselves will not help, which is why I provide a lot of education. We have videos in the member section. I provide one-on-one support, which I think is key. I provide one-on-one sessions with our members. And, other places, they would charge you $200 an hour or a few $1,000s up front to have the privilege of having you speak with them for 15 minutes. that's not how I work. Every member has access to me for a one-on-one session. If it's more than one, it's absolutely fine. As a matter of fact, I encourage one-on-one sessions because I think it's just essential in knowing exactly what to do. These levels could make you profitable, but you still need to know how to trade. So if anyone thinks you can just get the levels and there you go, you can start making thousands a day, it's no, no. You still need knowledge of trading. You still need guidance. You still need support. Unless, and we do have a couple of those, we have some very experienced traders in our community. Now, they don't even come to this room because they know what to do with these levels. They put them on their charts. They have their own approach to trading, and they do extremely well. And they don't need to be in the room, and they don't schedule a one-on-one with me. But those are the exception, really. I think most people do need support, and I think it's absolutely normal to need support when you are starting something new. And let's face it, trading is one of the most challenging things one can take on. So anyway, I'm gonna go get some more coffee, and group members will start coming in soon. But just wanted to kind of take a few minutes and talk to you before the day really starts. And at the end, there's going to be a recap of all the trade alerts that I posted last night. Okay, so we're going to do a quick recap. We're going to first start so this was the account that I traded in the live room, and this is the rhythmic dashboard. So every month, right, and I said it many times before, every month after a payout, I start with at least $10,000 over the starting balance. It gives me $10,000 in available drawdown, which greatly reduces the odds of me blowing an account, because while I have losing trades and I experience drawdown, I'm not going to draw down $10,000. So the $150,000 account started with $160,100 at least, and the $50,000 account started with $60,100. So the 50,000 is trading also the alerts, but in a different way. This is the account, the $150,000 account, is what I trade in the room. It just gives me more availability for contracts because there are 7 instruments. Now, it's rare for me to trade all 7, but I have been trading about 5 at a time. So in the room, as you've seen, I tend to hold positions. It is a different kind of trading. It's not scalping, but it's completely based on the buy and sell levels that I post every evening for our members. And eventually, in time, not immediately, but eventually, my hope is that the members will be able to hold positions and eventually go for more than $100. But it cannot be done at first. It just cannot be done at first. You must grow the account, or the trailing drawdown that Apex and Lilu and other prop firms have, the way they structure it, will hurt you if you are up 1,000 and then get out at plus 200, and all of a sudden you drew down $800 even though you are ahead of the game. It's a crazy way of doing it, but that's how it is. I mentioned before that not every prop firm is like that. There are prop firms that use end of day drawdown. And anyway, what I want to do is I'm going to close this and open NinjaTrader 8, because over there I already have all the levels, and we can just go over and do a quick summary. All right, so these were the alerts posted last night. You can see 6:30. I'm on the East Coast, so about half hour after Globex opens, our members get these alerts. It's always the evening before for the following day. This way, nothing's a surprise. A trader has plenty of time to plan, to draw the levels, and just be prepared for the following day. So the Nasdaq was a buy at 13,283. And again, I know I mentioned this before. This, of course, is early. Now I was awake, but not everyone is an insomniac like me. So maybe you were not awake for this, but I just want to point out again how price starts to accelerate toward the buy level the closer it comes to the buy level. And that is why once we're above the halfway point, we're starting to look. Maybe if I made this a bit louder. Okay. Once we're above the halfway point, which is here, because the sell was at 148, we start look for long trades. Then, of course, it breaks right through. And if nothing else, even if we're not in a long trade, we know we don't want to short this. This is a strong market. The market is in a stronger position. If it's above the halfway point, by the buy level, we are not interested in shorts. We're looking for longs only. Then price goes through, just kind of goes sideways. This is Globex. Now, we do anticipate for price to come back to the buy trigger. There is a reason for that. I'm not going to go into it now. But this level continues to attract price, even if price is above it. So price very often will come back to the trigger, which is why you see with multiple instruments, multiple times a day, the market retests either a buy or a sell level. So here it is, and look what happens, right? It goes under it. Now it's still above the halfway point, so we are still bullish, even though price is coming down here. This is the US Open, 930. We are not looking to short. We are looking for an opportunity to buy. And full disclosure, I actually tried taking a long where I thought the market would stop and turn around, and actually I took a loss. But when market came down and then reversed, I took a long that made up for the short. I'm sorry, I took a long trade that made up for the loss of a long trade from here. So you see how, again, this attraction toward the level, even though it went under, comes right back, then goes under and comes right back. Multiple opportunities. If you are just looking for 5 points, multiple opportunities to get you $100 per contract. Later on in the day, so now you see it's coming down. Here is the halfway point. Now there is a bar that closes up. This actually is a long opportunity here. Once a bar, after testing the halfway point, closes above it, we are now closer to this buy trigger. It's okay to take a long here. Now, if you're looking for 5 or even 10 points, I'm sure you had it, right? From like, if you do it here from like 28, it looks like the high is around 50. So, I mean, definitely about 30 points over here, 20 points over here. So if you were looking for 5 or 10 points, you would have gotten it. If you were looking for the move all the way back to the trigger, unfortunately, it did not work out. Let's take a look here. Once price is below, now you are no longer thinking long trade. If anything, you begin to consider short trades, but you are kind of close. I'm not sure if you would take a short here. I know I wouldn't. But the kind of price comes back, goes again above. But all this price action right around the halfway point is not quite as a high probability. Now, again, if you're looking for 5 points, you would have gotten it. But as far as kind of a larger targets, not quite as higher probability as over here, let's say, right? When you see this, when you are close, you know the attraction is very strong here, not as much here, further away. Anyway, let's take a look at the S&P. All right, so the S&P was a buy at 41.59, a short at 41.32. So we draw our levels, 59, 32, with a halfway point in between, right? And let's take a look at what price does. Now, again, this is early in the morning, but you see the same thing, right? It's not only with the NASDAQ. It's not only today. You can look at previous videos. It's just something that happens. Here is the price, accelerates right to the trigger long, to the buy level. Retraces, goes right back to it, and this time breaks through it. And again, once this happens, we don't want to be short. Definitely not short. Later on, price again, so kind of like the NASDAQ, goes below, comes right back, but then breaks down. And now it's below the halfway point. And now, again, you are no longer thinking long here. Now you are thinking, okay, if price goes slightly lower, and in the room I advised below 37, 41, 37, because the trigger was at 32, said anything below 37 is a legitimate short trade if you can find a short setup. Sure enough, accelerates toward the sell trigger, then consolidates around it, and then breaks down. And later on in the day, now take a look at this, comes back to the short trigger, turns around, and down we go. So, and now at the trigger again. So again, these levels attract price not only in case of a short. First, it attracts the price down, but then as price goes below, now I am not saying take a long to it. You don't want to be long when market is in a weaker position. I'm just pointing out how this force that exists at this level now pulls the price up. Price gets away, pulls the price up. Let's take a look at oil. All right, oil was a buy, 81.25, a sell at 79.91. So this is obviously early in the morning. No one is awake at this time, at least not on the East Coast, not me. But just to simply point out what happens to price. You see it here, like in the NASDAQ, like in the S&P. At this level, remember, was posted 6:30 p.m. the previous day, about like 10 hours earlier. Here it is, runs up to the level, retraces, but stays above the halfway point, runs up to the level, retraces, up to the level, retraces, up and through the level, retraces, goes below the halfway point. So what are you thinking now? Now you're thinking short, right? Goes below, now you're thinking short. Look what happens. Races toward the sell trigger. Goes up, races toward the sell trigger. Goes up, races toward the sell trigger. So you see this continuous, it's so repetitive. Even though I'm talking about different instruments, you see the repetition. It happens all the time. It trains your brain to start recognizing what is happening. So at first, might be a bit confusing. You might be hesitating. Understandable, very normal. After a while, you just, because you see this day in and day out, you really begin to train your brain. Okay, I'm above the halfway point here. Chances are price is going to go to the trigger. I'm above the halfway point. Chances are price is going to go to the trigger. And away and back. And then, well, now we're under it. Now I no longer want to be long. Let's look for shorts. Why? Because chances are price is going to go, in this case, the short trigger. Let's take a look at gold. Gold was fascinating today. Gold was a buy at 2005. Let's see how gold worked out. Well, so again, very much sideways, very typical of gold, kind of sideways, and then we're getting closer to US bid session open for gold, and I mean, just price races to the trigger up and breaks through. And if you ever wanted to see an example why you don't want to be short above the trigger long, well, here it is. It was anyone who was short here just got run over, completely run over. And even though you might get lucky a few times, and in a long run, it's a matter of time before you are hit with this. And if you are taking a short and then you refuse to get out of it, this will destroy your account. But our members know not to try and take a short once price starts accelerating up to the buy level. You don't want to do that. You want to think, how am I taking a long trade? Price is going higher. All right. So it was a great day. So now I open up the room at 6 a.m. I don't narrate much. I pretty much just show my trades. Again, my trades are different than what a starting trader should be going for. I strongly encourage, take the $100. There are so many opportunities during the day to get $100. Grow your account. Take the 100. In time, you will be able to hold on to positions when you no longer have to worry about a trailing drawdown, when you have a sufficient account size so you can withstand losing trades. And I'm no different than anyone else. I have losing trades. People in the room will tell you I have losing trades. But I'm not concerned about blowing the account because number one, I have my rules, I have my plan, and I have the account size to withstand volatility. Okay, so email me with anything, and thank you for watching.